Hey everyone, Apple reported fiscal 2023 first quarter earnings results and the stock is up about 1% after hours. So in this video, I was going to review Apple's earnings, share them with you, and also answer if Apple's stock is a buy after these earnings came out. So revenue decreased to 94.8 billion in the quarter. This was down from 97.3 billion year over year. Impressively, earnings per share were flat at $1.52, the same as earnings per share from last year. Surprisingly, iPhone sales increased to 51.3 billion, up from 50.6 billion last year. There were concerns that iPhone sales could drop year over year. So this increase is a surprise, an upside surprise, of course, depending on which analyst forecast you were looking at. Mac sales crashed to 7.2 billion. This was down from 10.4 billion in the same quarter last year. Remember, computer sales industry wide were down 30% in the first quarter. So from January, February, March, computer sales were down 30%. This has troubled companies like Intel and AMD, which already reported earnings also. They showed significant declines in their segments that sell into computers and sell into the computer sale market. Apple is no different. The Mac sales crashed to 7.2 billion from 10.4 billion, roughly a 30% decline in line with the industry's decline. iPad sales fell to 6.7 billion, a smaller decline from 7.6 billion last year. Overall, hardware sales were expected to be under pressure in the first quarter as consumers spent more of their money on away from home activities, right? People in the first quarter spent more money on restaurants and travel, bars, concerts, theme parks, those kinds of things. And a lot of people already bought iPhones, iPads, and computers in 2020 and 2021. And these are long lasting goods. Once you buy an iPad or a Mac computer or an iPhone, you're probably not going to replace it for several years. So there's going to be some pressure in hardware sales in the near term as Apple looks for new customers while it waits for existing customers to refresh those devices that they bought in 2020 and 2021. Thankfully, services revenue increased to 20.9 billion, up from 19.8 billion in the same quarter the year before. Apple's services segment is the key to rising valuation because gross profit margins in its services segment that include things like Apple Music and Apple TV Plus, those gross profit margins in that area are roughly 70%. That's compared to gross profit margins in the hardware segment that are closer to 34, 35%. So the key for Apple is growth in the services area because those are more lucrative sales. It seems that consumer demand weakened significantly in the Americas, with revenue in the region falling to 37.8 billion, down from 40.9 billion the same time the year before. Almost the entire decrease in fact, more than the decrease in overall revenue was caused by the Americas segment. Excluding the Americas segment, Apple would have reported year over year revenue growth. Although I did find it a little disappointing that sales in the Asia region did not grow as robustly as I thought. The rest of Asia Pacific region, I'm just looking at it right now, grew to 8.1 billion, up from just 7 billion. And I'm also disappointed in the Greater China area. Revenue fell in that region to 17.8 billion, down from 18.3 billion. I was hoping Apple could catch a tailwind from the economic reopening in China. That hasn't been the case yet. They still might catch a tailwind later on in the year. That just hasn't been the case just yet. Finally, cash flow from operations decreased to 62.6 billion, down from 75 billion in the same time the year before. But this is mainly due to Apple paying down its accounts payable. It paid that down. It paid 21 billion in accounts payable this year compared to last year. Sometimes companies offer a discount to pay your accounts payable early. Maybe Apple saw an opportunity to do that. It's not uncommon for companies to say, you know what, we'll give you 90 days to pay us back, but if you pay us back within 2 weeks, we'll give you a 5% discount. So businesses are incentivized to pay their accounts payable earlier and capture a discount. Now, with the cost of capital rising significantly in the first quarter, I wouldn't be surprised if those offers were increased as enterprises wanted to get their hands on capital sooner. Overall, a good quarter for Apple, especially as it relates to iPhone sales. I was not expecting iPhone sales to increase. I was expecting a decrease similar to the iPad and Mac. Well, maybe not as severe as the Mac segment, but I was expecting a decrease for the reasons I mentioned earlier. So I was impressed by that and surprised. Overall, I would say Apple stock, I had Apple stock as a buy coming into these earnings results, and I would reiterate that rating. There wasn't anything bad enough in these earnings results for me to downgrade my recommendation for Apple stock. So if you're interested in buying Apple stock, I still have that as a buy on my list of recommendations. All right, thank you so much for watching, and I hope I see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.